Bitcoin being this pristine collateral, we were talking about how, for forever, especially for the last 100 years, real estate has been that collateral that people build generational wealth on. They can leverage with debt for more assets, et cetera. We were talking about the way technology scales, and we can look at the automobile industry, how it quickly scaled because of the venture capital, and then it died, but then eventually grew again. Same with the internet space. And then we were comparing that to the kind of crypto boom that we're in today, and how Bitcoin can be that pristine collateral. But now we have this rise of DeFi that's happening. But maybe that is also getting ahead of itself, similar to the automobile industry and the internet industry did as well. And I think you were going there.
Yeah, it's the noise in the early. It's in the noise in the early phase of the movement, right? So when you look at the kind of the house of cards that are being built in the DeFi space, it's like it's a pump and dump. Like, I don't think I've seen a single week where quote unquote DeFi project hasn't gone to zero, like overnight, right? Like a rug pull or a hack or a mistake or a fuck up or something, right? Every single time. Now, someone will go out there and say, yeah, well, that's part of the innovation process. But, I would go out and say, look, this is people's money you're talking about. Like, and this is, fundamentally why none of this stuff happens on Bitcoin. Like, Bitcoin exists to be pure, pristine property that is not backed by the promise of a bureaucrat or the state or anything else, but that private property is guaranteed by mathematics. That's never existed before. So when we look at these two things, you sort of start to see the signal in the noise. And mind you, there's going to be all sorts of DeFi shit. People are going to make a lot of money. They're going to lose a lot of money. There's all that noise that's going to happen in and around the space. But what's going to happen in the middle is like the Model T Ford. It's going to be like this strong core that gets built. And that core is going to be Bitcoin as globally accessible, decentralized private property backed by the promise of mathematics that anybody, anywhere in the world, at any point in time, can draw liquidity against in the form of their local fiat for purchasing power to either enhance their lifestyle or compound their wealth. So this is sort of the direction that we want to take Amber in our next phase of the product. So it's like, I'm pretty sure we mentioned this the other day, but phase one is, of Bitcoin was proving what Bitcoin, that it was a thing that couldn't be stopped. So that was Silk Road and the darknet markets. Phase two is trading. So showing that it's a collectible, that there is some value there. And, Silk Road took it from single digits to triple digits or quadruple digits. Trading took it from triple to 4-5 digits. Now we sort of move into this next phase, which is Bitcoin as pristine collateral before we get to the future phases. And that'll take Bitcoin to 7-8 digits potentially, because people will be able, like, this transition off the fiat standard into the Bitcoin standard has to happen somehow. And this is how it's going to happen. Bitcoin's not ready to be used as transactional currency yet, but it is perfectly ready to be used as pristine property. And that's sort of where we move into. And that's kind of what we want to corner with Amber as a product, not only with there's a series of different ways we want to do this. Like, we want to do it with the ability to deposit your Bitcoin into a multi-sig address on Amber. Then you'll be able to draw dollars against it and fund basically like a recurring line of credit in the form of a card that you can go out and spend. We'll do it where, in regions where we can't do the card, we'll go down the buy now, pay later path, where we go, directly with merchants and allow you to, make a purchase with a merchant that you traditionally may not have been able to, that you maybe you didn't want to sell your Bitcoin, maybe you didn't want a taxable event, maybe you didn't even have fiat rails in that location, but you want to buy something like this, you'll be able to buy it. And we start to build this sort of parallel credit market in places where it's never existed before. You don't have good private property rights in Venezuela, but we'll be able to allow someone in Venezuela to use their Bitcoin as collateral to make a local purchase as and when they need to in local fiat. So that's the thing. It's like, save Bitcoin, spend fiat, and let's the bigger idea here is, or sort of the underlying idea is, kind of doing at the retail level what Michael Saylor is doing at the institutional level, which is a retail speculative attack on the fiat system.